Hey everyone, welcome back to Corporate Decoder. Today, W.T.I Fund XI, Incorporated just filed an 8K report, and it is all about a shareholder meeting with some interesting voting results. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing gives us a peek into how decisions are made when a company has a single dominant shareholder, and the numbers show a very clear consensus. So WTI Fund XI Incorporated, or the fund as it is called here, held its annual shareholder meeting back on May 20th, 2026. What were they voting on? Well, two main things. First, the election of 5 members to the fund's board of directors. These directors are Monica Lai, Arthur Spinner, Scott C. Taylor, David R. Wainick, and Maurice C. Werdiger. Second, they were voting to confirm Deloitte and Touch LLP as the fund's independent auditors for the fiscal year ending December 31st, 2026. Think of auditors like the official scorekeepers for a company's finances. They make sure everything is reported accurately. Now here is where it gets a bit unique. On April 6, 2026, the company set a record date to figure out who could vote. At that time, there were 100,000 shares of the fund's common stock available. But get this, 99.99% of those shares are owned by just one entity, WTI Fund XI LLC. The filing explains that the LLC's members, the people who own parts of the LLC, have what is called pass-through voting rights. This means the LLC, as the main shareholder of the fund, really can't do anything without getting approval from its own members first. So for the directors to be elected, they needed the approval of at least a plurality, that means more votes than anyone else, of the LLC's membership interests. And for the auditors to be ratified, meaning officially approved, they needed at least a majority, meaning over 50% of the LLC's membership interest to give the thumbs up. Let's look at the voting results. For the election of the board members, a total of 60,364.67 LLC shares were considered. Out of those, 42,907.88 shares voted for the election of all 5 directors. That works out to 71.08%. It is important to note that the filing shows no abstentions and no against votes for this proposal. Now, for the second proposal, ratifying Deloitte and Touch LLP as the auditors. Again, 60,364.67 LLC shares were considered. And just like with the directors, 42,907.88 shares voted for ratifying the appointment. This also represents 71.08% of the outstanding LLC shares. And again, no votes were cast to abstain or vote against it. The filing states that because of these results, the LLC cast 100% of the fund's shares in favor of approving both proposals at the meeting. This tells us that the sole shareholder, the LLC, and by extension its members, are in complete agreement on who should be on the board and who should audit the company's books. This kind of unanimous or near. Unanimous voting from a sole shareholder is not unusual for companies with a straightforward ownership structure like this. It often signifies clear control and a simplified decision-making process, at least on the surface. And that is pretty much the meat of this particular filing. It is a standard procedural report confirming that votes were cast and decisions were made at a shareholder meeting, especially concerning board appointments and auditor ratification. Looking at this filing, it highlights the power of a single controlling shareholder. The fact that the LLC's members had to approve things before the LLC could vote means that even though the fund has a board of directors, the ultimate authority rests with the members of the LLC. This is a key aspect of corporate governance that can differ significantly from larger publicly traded companies where hundreds of thousands of individual shareholders vote on these matters. Here, it is a much more concentrated decision. The voting percentages, while showing a clear majority, don't indicate any real contention or debate, which also suggests a high degree of alignment among the members of the LLC. The risk here is less about external shareholder dissent and more about internal alignment within the LLC. If there were disagreements among the LLC members, it could create significant friction for the fund's operations. However, based on this filing, there are no such signs of internal conflict. The story here is one of decisive, unified action from the company's ultimate owners. What I will be watching for in future filings is how this unified front translates into operational performance and strategic decisions for WTI Fund XI Incorporated. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.